morning. Good morning.
Good morning. How you doing, man?
Day 3 on the DM. I'm doing good, man. I'm doing good. How about yourself?
Very well.
All
Big
right.
day today in the market. Waiting for that. 2 o'clock
ahead.
it's gonna be a long day today.
Oh yeah, I was speaking. Well, let's go ahead and introduce ourselves, and then we'll get into a little conversation I was having with another lender that I want to ask you about, and
Okay.
then we'll get into the topic for the day.
Sounds like a plan.
So I'm Robert Murillo with broker associate with Compass Florida, license number 3373543. Here with my partner John.
John Sepulveda, Origin Point, and MLS 130-244. Good morning, everybody.
Good morning. Good morning. The Daily DM, episode 3. So, speaking of interest rates, real quick, let's do this briefly before we get into the pros and cons about fixer-uppers.
Sounds good.
There's something happening, I want to say on or before or after, and something I was looking at a chart about I guess some kind of COVID relief and interest rate adjustments based on your credit score. Do you know anything about that? Some type of index? I think it was the chart that I saw was mainly related to conventional loans, but I think it was going to affect all interest rates.
So I haven't heard about that. The only thing that's they've been talking, and actually they paused it temporarily. Is they were gonna do an adjusted loan level premium LLP.
Hey, that's exactly what it is.
Oh yeah. So it's but it has nothing to do with rate. It was to do with the debt to income ratio on borrowers. So Fannie and Freddie were going to do an additional add-on, and again LLP, loan level price, loan level premium, and they were going to increase, and I think there's a hit of 3/4 of a point in bips, 750. I think it's that. I honestly don't. There's various levels depending on the credit score and depending on the debt to income.
Yeah.
Basically, it was going to be an additional cost to borrowers. I mean, that's what the bottom line is. They were just going to, Fannie and Freddie were just going to add an additional cost because it's another layer of risk for borrowers with certain credit score, and certain debt to income ratio. So higher debt to income with lower score, we're going to pay a higher rate, basically is what it meant. And they paused it. They paused doing that because of the rates and because of the environment. So they're holding off on that.
Gotcha. Because here it says higher LLPAs and lower LLPAs, new versus old for purchases. But I'll share this with you.
Yeah, I've seen it. But again, they paused it last week, so it's not.
Gotcha.
They paused it indefinitely. It was supposed to go into effect, and it has not gone into Fannie. They held off on implementing it because it was just going to raise rates for people with lower scores and higher DTI. Their rates was going to increase.
Okay.
I don't want to get into the that's a whole other topic, just how rates work. So that they were not increasing the rates, they're increasing the cost, the pricing of the rate, which equals a higher rate.
All right. So I see, I mean, according to this email notice, it says live April 5th. So I'm just gonna note that for us to go over, I guess, sometime around that date.
Yeah, and we'll go. Yeah, but they announced it last week that they were like I said, they were holding off on implementing it.
Yeah,
because there's a big thing it's the whole industry. It wasn't. It's a Fannie Mae thing, so that was going to obviously put on the pressure with a higher rate. Where rates are bad enough, so that's not going to that would have been bad.
Yeah.
Yeah. And today, as we spoke this week, the Fed is 2 o'clock, and that could literally be the line on the sand, and you can, we're going to be able to go back today at 2 o'clock and see what happened. The market is betting heavily. If you saw yesterday, big rally in the market. that means people are betting that the Fed's gonna not raise rates today.
Yeah.
And then so if, as we spoke earlier, let me just recap, if he raises rates to fight inflation, which is what he's been saying he's going to do, that's going to put added pressure on the banking system, which is fragile and on the verge of collapsing. So, that's just going to make people nervous. If, once he raises that, then all the alarms are going to come out, and, now the banking, and people are going to start, it could cause concern for people and start freaking out. And then people will, all the ones that are putting the money in the market, they're going to start taking it out and hopefully not lose what they put in. And you should, there should be, based on the data, there should be, downward trend on stocks, and then the bonds people will leave there and go into bonds, which will cause the bonds to drop in price, and that will in turn cause rates to drop. So, that's a lot of stuff going on in the market today. It's a big day for rates and for the market. So we'll see what the Fed does. Would not want to be in his shoes for sure.
It sounds like almost either way, he's public enemy number one for now.
Oh, he's in trouble. Yeah. He put himself in that predicament. I mean, I don't know what it is. Like, if you see the narrative in the media and all this stuff, and you have all these people talking, and I don't know what you know what I mean? I don't know what the reason is of the narrative, right? But there is definitely a narrative from the media that housing is bad and housing is crashing, and that's just sort of the narrative that, that people are hearing. I mean, there's, the headline yesterday was negative appreciation on because yesterday the pending contract sales report came out, and the median, not appraised values of property, but the median price. And the medium is the middle, right? So there's some, it's right in the middle. So there's 50% are higher and 50% are lower, and the medium is the medium. But that's not property value. That's just the medium size of the property, right? It's like an average. And so it dropped 0.2 dropped 0.2%.
Yeah.
Month over month. I mean, that's what it dropped. And the headline was, in one of the, business channels, news channels, housing in the negative numbers. Like, that was a big headline. That's just incorrect data. That's just not true. That's that the median price changes, but there's actually reports, one has property values going up at 7.6%, the other one 5.5%. But so you take the lowest one, 5%, take, average them out, add them up and average them, 3%, property values appreciated last year, no matter how you slice it. But the media kind of pushes this narrative of housing crash, which we talked about earlier. There's people sitting on the sidelines waiting for a crash like 2008 where prices is going to drop. That's just not happening.
Tactics. All right. So speaking of that, waiting for, aside from waiting for prices to drop dramatically, right? Because back then, the prices, the property values dropped by like between 40 to 60%, right? In a lot of cases. So now let's talk about today's topic, the pros and cons of buying a fixer-upper. Right, last week, the middle of last week, we had spoke briefly about 203K loans, not on video or anything like that. And you happen to be well versed in that arena, so let's talk about fixer uppers and how people, first of all, the pros and cons, and then how people can actually finance the renovations, the cost of renovations on fixer uppers.
Okay, that sounds good.
So obviously, the biggest pro about buying a fixer-upper is finding a lower purchase price, right? Finding a price below market value, and generally they're lower in price because of their condition. So that's one of the biggest pros that I know of.
Correct. And usually you find those, you find those type of properties in two scenarios, right? One is on a market where the seller, the owner, is, having financial struggles, difficulties, and needs to sell the property. Maybe it's a rental property that they need to get rid of. Oh, maybe it's the property they live on. They come in some hard times and they don't have the money to fix it. They might have the equity, but a million things could happen, right? So one scenario is as a financial situation from the seller that does not have the funds to fix the property, to put it on the market,
maintain the property,
and then sells the property sort of as is in that shape, and a buyer could find a better deal. The other one is a property that's like foreclosed or short sale, that the buyer can, again, and that's the case, obviously the house is in disarray, and then and it's got some issues. It may be vacant, may not be vacant. There might be a tenant in it. That who knows, but that's the other situation where typically you find properties that need repair. So a distressed seller, both cases are just, kind of a case of a distressed seller. One, the seller still owns the property, so they can, buyers they'll be able to sell it if they find buyers that have a rehab loan, or if they've already lost the property, it's foreclosure, then the buyer would buy the property there.
Yeah, definitely. I mean, in some cases, an investor may have had a property that was a buy and hold, and they milked it. And the final renters maybe left it in a condition that they decided they wanted to sell without having to do anything. And
Correct.
maybe they may not be in financial distress. They just want to sell it as is without fixing it up.
Correct.
So there's many different reasons why you could get a lower purchase price. But another benefit of buying a fixer-upper is the customization, right? And being able to personalize, come in, put in your personal touches. Like, let's just say, if a home is gonna require a kitchen to be replaced or repaired, then you might as well come in and put in the touches that you want, put in your own taste and flavor on the property as well.
Correct.
So that's a pretty cool thing. Me personally, when I go into a home, even if I'm not shopping it and it's not for me, I look at certain features and I'm like, okay, I would have done this instead, or if I was to buy this, then I would replace it with this, right?
Yes.
And just customize it to my liking.
Absolutely.
Then of course there's the potential for value appreciation, right? Having the ability to come in, make certain adjustments, and increase the property according to what's happening in the market, and seeing, kind of like how we spoke about appraisers yesterday, and how they get down to the nitty gritty when it comes down to comparing apples to apples, and seeing what other properties have sold in certain areas for certain prices, and the features that they had to match that value appreciation opportunity.
Yep.
So, and then of course, you got a whole bunch of I'm just gonna call them wannabe investors, right? But getting into a fixer-upper is a perfect learning experience and opportunity to learn that process before you get into a whole fiasco, right? One of my clients, we actually have a condo coming into the market soon. So they had sold and bought with me before a few years ago in 2018, right? And even then, when they got into purchasing an investment property, they bought the property blind off of an auction, right? And the property at one point was in a condition that they were completely unaware of because they didn't see the property before.
Yes, I don't see.
So it was sight unseen, and it turned out to be,
nightmare.
So it brings us into the cons, right? About buying a fixer-upper, right? And the uncertainty, and not just the not knowing of, like, all right, if you're gonna purchase a property, you're purchasing it cash, and you didn't visit the property before finalizing the purchase, then you could wind up with some surprises.
Now, on a rehab loan, though, it doesn't work that way.
Okay.
Because when you do a rehab loan, it's the same process as a regular loan at the beginning. There's really no difference. You still got to qualify. You know, the whole process is the same. It's a regular mortgage for all. There's really no difference. The difference between a regular, let's talk about 2 or 3K FH, which is an FHA loan. The difference between a 2 or 3K and an FHA loan, everything is the same. All the parameters are the same, 3.5 down payment, everything is the same, except that there is some money for the rehab part that is held by
Mm-hmm.
the lender.
Mm-hmm.
And that money is distributed to the GC, general contractor, who's doing the work. There's some money given up front, at the beginning to start the project. The 2 or 3K inspector goes out. Well, actually, let me back up. The 2 or 3K goes out to the property at the beginning, right? And that's where they both loans differ, right? So the person qualifies. There is a 2 or 3K consultant involved. That's sort of, think about like an appraiser, right? It's a third party that, and he doesn't appraise the property. He does more than that. Like he'll look at the property, he'll talk to the homeowner and discuss what the homeowner wants to do.
He'll talk to the future homeowner, right?
Future homeowner, correct? Yeah, the buyer.
'Cause
He'll speak to the buyer.
that's where
And
I'm at in the process now.
yeah,
Today I have to call the HUD consultants and schedule one.
so so you schedule a meeting. They'll go in and you tell them what you're trying to do, right? And
Mhm.
then the HUD consultant will put together a scope of sort of services and give you here's what you want to do. Here's the thing that you need to do. And then the home buyer needs to go out and get some quotes, talk to some general contractors and get some quotes. Because
Mhm.
2 or 3K does not allow the buyer, him or herself, to do the work. So like if you like to do it yourself, you're handy, you can do it, but you're not able
It's
to.
not a DIY project.
Correct. It's not. You have to go through a GC, and it's got to be licensed and all that stuff.
As much
So
as you'd like it to be.
correct. And you might, I mean, there are, it's just, yeah, you need to get a GC involved. So once the home buyer finds a GC, hopefully gets a couple of different quotes, and finds, that obviously depends on the market and how busy it is and what's going on, but the home buyer will do that. And then we'll give that to the consultant. The consultant will review all that stuff. They'll make sure all the paperwork is completed and everything matches. And the cost is what the consultant understands is the typical cost of that repair. Like a new bathroom, the consultant will put a figure in. You can't just say, I need, $500,000 for a bathroom. Like it doesn't, it doesn't work that way. So it's got to be in scope, and that's why the consultant is there. Because really what the consultant is there to do is to guide the home buyer and make sure the home buyer is protected and does not get, ripped off by the a contractor. And so
And to
that
make sure that the home is in move-in condition.
it
'Cause
gets
on an
right.
FHA loan, you have to meet certain
It's
guidelines.
got to meet the standards, correct. And then, but the money they give it in draws. So the initial draw is to kind of get the project going, get started.
Mhm.
The consultants, signs off on the document, and the home buyer signs off, and then they send a check to the contractor. The lender does for the first draw.
Mhm.
And there's a scope of work that needs to be done, prep, clean up, whatever, right? A, B, C, D. Once it's completed, the GC will inform, or the home buyer will inform the 2 or 3K consultant, phase 1 is done. The 2 or 3K consultant will go out to the site, look at it, make sure everything's up to code, make sure everything's completed, so on and so forth. And the consultant will sign off on that. The home buyer will sign off on that. And then the lender will send the second draw to the GC. Or send it to the home buyer, and home buyer will give it to the GC, however but that's kind of the process, right? So, and it's depending on the size of the scope of the project, it could be 3-4 draws. It
Mhm.
typically shouldn't be more than that, right? 5 or 6 draws. I mean, it shouldn't be more than that, but,
And it has to be completed within a 6-month period, right?
correct.
Okay. Yeah, because I mean, the good thing about it is that it'll limit the potential for over improvements, right? Because like I find myself
The
like,
consultant's involved in there, and
it's
the consultant keeps you in line and tells you, number one, the cost, and number two, because the property, well, obviously, but you can have 2 properties and you can put, I don't know, gold faucets in your property and the house next door does not have gold faucets and both houses are identical, your house is not going to be worth more than the house next door if they're identical, except for the gold faucets. You
Not
get no
going to be
value. You get no value for the gold. Some homeowners. That's the thing. When you have a conversation with a homeowner who they put a sentimental value to the property,
Mm-hmm.
and that has a cost, right? There's a price to that value, but that price is for the homeowner, not the home buyer. The home buyer doesn't really care that you've been in that's been in your in your family for 200 years, right? The home buyer doesn't really care about that. He's starting his new legacy with his new family. And so that's where the seller, the issues with, pricing and stuff. So the consultant is kind of there as a consultant to kind of guide you and say, well, no, that won't work out in the budget, or that'll be too much, or, that's, I mean, they're not a personal designer or a decorator or anything like that. They're really just there to sort of guide you and make sure that the home buyer is protected. That's really what the premise behind that is.
Yeah. Yeah, no, and I think it's very necessary in today's day, and what's happening now, because, like, for instance, I had a whole list of things that I would have liked to have gotten done, and we got to slash maybe 30% of it just because the cost of
The
things
cost won't, yeah, you can't,
is
because
crazy
you're
now.
capped by, on an FHA loan, you're capped at the max loan value. On a Fannie, you're also capped. You got a little bit more space, but you're still capped. There is a cap on how much you can sink into it.
So what about
Theoretically, with an FHA loan, you can
yeah.
get an FHA loan and you can build a new house with a 2 or 3K loan.
Oh, so that does apply to brand new construction?
Not all lenders do that.
Okay.
Not all lenders do that.
So you're saying
Origin Point does not, that we're not going to be able to do. We're in the process of getting the platform to do 2 or 3K, or the capability to do 3K. Guaranteed does 2 or 3K. Now they're bringing that to Origin Point. But new construction is not, right? So some lenders, you got to find a lender to do that. But you could buy a lot and build a new house with 3.5% down payment on a 2 or 3K loan.
And is that the purchase of the lot, or you already have to own the lot?
No,
first?
you can actually squeeze both in there.
Okay, as long as
It's not. I mean, you got to find. I honestly, I mean, I don't look into it. I don't see it. I couldn't tell you a lender that around here that does it. I'm sure there are.
Actually, I just created a deal, an opportunity with a home builder and Compass with the new development department, with Ultra Modern Development Group, where their in-house financing allows buyers to purchase the lot and the custom home in one loan. So now all Compass agents have the opportunity to have a second listing along with their vacant lot listings. So
They can either do the lot or they can do the home.
correct.
Yeah.
And they catch a commission on both.
Yeah. Yeah.
So I'm getting familiarized with the process and seeing it happen now that we started that program. So I didn't know it was referred to, or it can be done with the 2 or 3K FHA loan, because we're calling it the one-time close. So instead of having to buy the lot and then leveraging the value of the lot towards a constructive perm loan, this loan program allows you to buy the lot and build the home with a one-time close. You don't have to close twice. So, and for us agents, now we
that's
turn
now
one listing into two.
And that's just a perm to construction loan. Like that's nothing. You know what I mean? Like it's a perm to construction.
Well, the cool thing about it is being able to do that at 3.5% instead of at 20.
Well, again, that might not be the same deal. Like it might not be the same.
No, I'm telling you, they're able to.
But it's going to be FHA 2 or 3K specifically.
Well, no, I don't. Again, I don't. We're just calling it. We so far we've only called it the one-time close.
Right. Because that's what well, you got to so the one-time close is just the general term of, and that's like a construction loan that you can do.
Yeah.
Now, only FHA rehab allows you to do it with 3.5%.
Yeah, so I just got to verify
You
to make
gotta, yeah.
sure
So,
it's
and like I said,
whether or
it's
not.
not, I don't know of a lender in the, because I'm not looking for it. So but I don't know of one. I couldn't tell you, XYZ bank, does the 2 or 3K. I mean, there's banks, obviously plenty that do 2 or 3K. Actually, not plenty. There's not a lot of people that are doing 2 or 3K loans. A lot of people don't know about 2 or 3K loans. A lot of people, because it's an FHA loan.
Yeah.
A lot of, there's a lot of misconception on FHA. A
Well, the
lot of
other
sellers
part,
don't like FHA. Some agents don't like FHA. It's more restringing. There's some restrictions, but FHA is a great program for home buyers.
no, and I think this is what happens a lot too. People would go into a home that might be distressed or is a fixer-upper, and they're looking at it like, one, it's a lot to do, right? It might be overwhelming to them. And two, if they don't know about the 2 or 3K FHA loan program, then they are thinking they have to come out of pocket for all those costs.
Mm-hmm.
And then three, if the house is still priced somewhere within the realm of fair market value, and there's not enough of a gap, then there is no room for them to play with and have those renovation costs covered by the loan.
Correct.
So those are three stigmas that are like, I can see why it would keep people away from. They have to find a real juicy opportunity
Correct.
in order to
Do it.
do it. Yeah.
Honestly, Robert, my experience has been that 2 or 3K is phenomenal, or a rehab loan. Let's not just keep it with 2 or 3K because that's FHA. Just a rehab,
A
a
fixed
rehab,
loan.
rehab loan in general.
That's not hard money.
Correct. Yeah, just a Fannie or Fannie Freddie or FHA. Like I'm talking about conventional financing.
Mm-hmm.
On the deal on my experience on a rehab loan is that it's either a foreclosure, a short sale, like one of those properties where, it's owned by the bank, it's owned by an entity, and it's just abandoned, distressed, and the buyer comes in, they're going to get a really good opportunity, right? Based on market and what the cost of the property. So that's where a rehab loan is super, super, super effective. I feel that, and this is just obviously my personal opinion, but I feel there's more opportunity on a rehab after the person owns the home and on a refi.
Okay.
That is more conducive to the customization and the, all the little pieces you're talking about when the person already owns the home, and then they do the rehab as a refi.
So what about what do you think is better, refi or HELOC?
Oh, a refi, 100%. A 2 or 3K.
Okay.
You're saying what's better, a HELOC or a 2 or 3K or a rehab loan?
No, refinancing, right? Or
Yeah,
doing the HELOC.
that's what I'm saying. Refinancing with a rehab loan so the person can do the repairs.
Yeah.
The 2 or 3K all day long.
Okay.
All day long, because the HELOC, the HELOC's great. You go, they give you a check, you got a blank check for whatever the amount is, and you go spend the money. But you're Mr. Homeowner, you got a check for $50,000 and go fix your house. That's, you can do it, but that's just a more dangerous situation, because then people have to know that, with the rehab, the consultant is hand-holding the home buyer and just guiding them between the 2 or 3K consultant and between the loan officer. The home buyer should be, protected and, have somebody guiding them through the process. Because as you know, that, you're going through it, it's complicated. It's not a slam dunk. You have to do some work. You have to be diligent and you have to do the stuff. So that's why when you if you already own the house, for example, where do I see a huge opportunity coming up here in Florida with rehab loans? Roofs.
Oh yeah.
There's gonna be a crisis happening. Well, insurance companies are telling, home buyers are going to say, you got to change your roof. I'm not insuring you.
Yeah, I know. Even if it's just 10 years old, they're telling them, and insurances are dropping.
Well, because that's the problem. There's a big problem with insurance right here in Florida. because
Yeah,
there's all the, you got I mean,
the claims and
somebody
yeah.
knocks on your door, you can get your roof, do it for free. We'll do it. We'll take care of it. Like, oh yeah, sure, change my roof. And then they do the roof, and then they file a claim. The insurance company doesn't, denies the claim, and then they go to court. Right.
Hmm.
So there used to be that governor changed, the law has changed. Now you cannot, I think it went in effect already. I'm not really sure of the date. So, I'm not, but there's a change. Before, the homeowner could transfer, and I don't know the correct terminology, but the gist of it is the homeowner could transfer the rights to the contractor so they can sue the insurance company.
Hmm.
And
Hmm.
that's why all this litigation is happening, and that's what's kind of part of the problem that's causing insurance. So now that can no longer happen. So the homeowners are not able to do that anymore with that
Yeah,
new
they
law
gotta
that was
go
signed.
through. They gotta go through an adjuster or an attorney.
Correct.
Right? Yeah.
So, and they can't just like so they're trying to curtail all these frivolous lawsuits and all this, people just changing roofs at will. So now they're gonna, and the people that 10 years old, you need a roof or I won't insure you. So there's gonna, the roof is 25, 30,000, depending on the size of the property.
Hmm. Hmm.
So not everybody has 25K lying around. Not everybody can just go and get a HELOC. Doesn't work. It's not that quite that simple. You need a
Hmm.
roof. What are you going to do? Get a 2 or 3K loan,
Yeah.
do the roof and do some extra repairs, bring up your property up to code, up to bring up property value, so I see more opportunity, again, personally, on the refinance side after the person already owns the home. But to go buy the home, again, if you find their opportunity, or if you're out looking for short sales foreclosures where you're going to find a much, really good deal,
Hmm.
that's where a rehab is 100% the option.
Yeah. Absolutely. I mean, another thing too on the receiving end, right? If I'm representing a seller who happens to have a distressed property, um, or uh, you know, if if a deal, if an offer comes in, and if it's not cash or conventional, they're already looking at it like, yo, I don't want to deal with that hassle.
Correct.
Unfortunately, that's the knee jerk reaction to offers that are not, like, okay, yeah, they're getting it below. We're on the market below market value, but I'd rather do a cash or a conventional deal to avoid the process of a 203K. So you would have to have a list. The listing agent would have to have the knowledge of the 203K loan process and be able to coach the sellers to have the patience to deal with that process too.
Well, and I would take it a step further. I mean, you got a savvy, agent who learns how to do this stuff. And, just like a builder has a program with a lender and, rate buy downs and future locks and all this stuff. And that's part of the buying experience, when they go into the builder and they buy this house, it's already
Mhm.
packaged with all the stuff. You can list the property and package it. Hey, this is perfect for for a rehab loan. Come and, you know, customize the home how you want it and get a better price and blah blah blah. And and you promote it that way, and you set everything up so that when the buyers go in, you have everything lined up with a lender who does 2 or 3K, the consultant, the lender already has the consultant, and it's in place when a home buyer says, hey, you want to go this option, so you can actually promote that.
Yeah, yeah.
you
It's a
know
good marketing angle so long as the seller is aware and willing to go that route.
Correct. Which, for the purpose of the seller, it doesn't really do anything,
Mhm.
right? Because it's not a regular FHA loan where you got to have, if it doesn't have the inspection, and the seller's got to go. That's the difference, right? On a regular FHA loan, I don't know if there's peeling paint, right?
Mhm.
Then you can't do an FHO. You got to take care of the peeling paint, and that's a cost that the seller has to take care of. That's why a lot of sellers are like, I don't want FHA.
Yeah.
They think there's costs that they have to pay, but on a rehab, the seller doesn't pay anything. There's no
They
the
still leave it
seller
as is.
is because the process for the seller during the transaction is completely, like, it doesn't change. They, the closing, 30-day closing, whatever the initial closing, because the rehab doesn't start after closing. They
Mhm.
got to
It
close
doesn't start
first.
until after closing.
Correct. So once they close, the seller's out of the picture. Now it's the buyer that's dealing. The seller doesn't have to deal with any of the stuff of the construction or anything. So for the seller, like I said, if you got a savvy
Make no
agent who knows how to
difference.
market this and presents it properly to the seller, hey, you got a distressed property, you don't want to sink the money into it, or you don't have the money to fix it to sell it, let's sell it this way. And here's the program I got for you. And then you can promote it as such. For the seller, it's a completely, it's just they don't, I mean, they don't, other than,
Have you ever done or seen it done a 2 or 3K loan on a multifamily, on a triplex or a
oh yeah,
duplex?
I've done them. Absolutely.
Okay,
Remember,
okay,
I came up here from Massachusetts. There are 3 and 4 families.
gotcha.
So that's the 2, 3s, and 4s is the majority of the properties. There's more than single family. So, oh yeah, and it's the same concept.
Mm-hmm.
Up there is heating systems, which are expensive. It's all units. You can use all the heating. You know what I mean? It's just it's a phenomenal program.
Okay. Okay, so that's pretty cool to know. Just cause the multifamily is definitely the way to go.
Yes, I wish there were more here, and there was more
I'm
multifamilies
trying,
here, man.
I'm trying to tell you. The only thing, the difference is up there, right? You guys have the 1, 2, 3 up, right?
Right. Yeah.
Down here, they're typically all
Sideways. Right.
all yeah,
Yeah.
yeah,
If
garden
I was
style.
a builder, man, I start building 3 and 4 family, 2 and 3 families to sell,
Yeah,
and start selling 2 and 3, building 2 and 3 families and start selling those.
yeah, going
That's an
up.
affordable. I mean, that's the best way. That's for first time home buyer. That is the absolute path. Should be that. Should be a
Mhm.
requirement. Should
Like
be
here,
buy a duplex or a triplex.
start here.
Well, because you're living in the property and you have rental income. So you're
Yeah.
not putting yourself in a situation where so if you're paying rent, right, whatever, 2,000 a month in rent, or you go buy a house and you got a triplex, even if it's, $700,000, right? I'm making up a number. With the
Mhm.
mortgage payment, with the 2 rental units, you're going to pay less than what you're paying for rent. So you have other people paying your basically your mortgage. I mean, it's a no-brainer. I mean, it's just,
It's like real life Monopoly.
exactly. That is exactly what it is. I mean, that's the path should be buy a 4, buy a 3, buy a 2, buy a single.
Right.
You know what I mean? Like,
So let me ask you this before the end of today's episode. Uh on the financial coaching side, right? What is it that you offer to people who are brand new to real estate and getting them ready to like, shift their mindset into going into real estate like that? Like, all right, I'm a virgin in the real estate game, but I've got decent credit. I've got some cash put away from working for the last couple of years, and I want to get in the game. What is your process like on the financial coaching side?
well, it depends on the what the individual situation of the person is,
Mm-hmm.
because everybody's like a fingerprint, right? Everybody's finances are completely different. Everybody has a different score. I mean, you and I could have the same credit score, but your
Uh,
credit and my credit profile can be completely different, right? I mean, it's just different loans, different history. I mean, so it's completely unique. So the
mhm.
first thing is looking at the person's true financial picture. And the next step is what the person's goals are, like where they're going, what they're trying to do. Most people don't know. I want to buy a house. I'm paying too much rent. I want to buy a house. Like, that's it.
Yeah.
Right. So, which is fine. There's nothing wrong with that. Right. So I try to take that, further and just trying to find out what you're trying to do. What are you trying to be? Are you going to live here for the rest of your life? Is this your, what are your plans? Because unfortunately, for the most part, people are call up, I want to buy a house. What's the rate? That's the first question. What's your rate? The rate
Mm.
doesn't matter. The rate is, I mean, I've been having this conversation with buyers for over 20 years. The
So
rate is,
their first question is, what's the rate? What's your question in response to that? What's your
what?
credit?
No, I'm like, I go into this, what I'm about to say to you, like, there's a lot more than the rate. We need to see what your situation is. The
Mm,
rate is the rate. You're not going to stop buying a house because of the rate. If you go find if you need to buy a house and you go find the property of your dreams and the rate is 15%, and that's where the rates are, you're going to buy the house. It's because the rates are the rates. The rates, 5% is 5% today, is going to be 5% in 50 years, and it was 5% 50 years ago. It's
And
5%.
that's just a matter of how much you're paying for the money that you're borrowing.
Exactly. I mean, it's just a number, but that's not going to stop you from buying your home. Like if you go and you find your home, it's just not going to
And
stop
you
you from doing,
qualify
like
for
you're
it.
buying, you're buying you're doing a rehab loan, right?
Yeah.
You found your property, you love it, it's in a great place.
Mm-hmm.
They tell you the rate is 8.5%. I'm making up a number. You're not going to say, oh,
I'm signing. I'm
I'm going
signing.
to wait until I'm going to wait until they're back to 3. I'm not buying my dream home. Like it's right. You know what I mean? It's just not. So that's just sort of, that's what the topic is. So the rates are high and everybody asks the question, what's the rate? But it's more than that. So it's really, what are your goals? Where you're trying to go? What are you trying to do? And then, I have the conversation, look at a duplex, look at a triplex, look at the numbers, look at the math. Do you have an emergency funds? Do you have I mean, there's people that want to buy an investment property and they don't have a month's worth of savings in the bank as an emergency fund.
Mm-hmm. Mm-hmm.
They own a home and they're going to buy a second, like an investment property, right? They
Yeah.
saved up some money. They want an investment property, but they have the money for the down payment and that they don't really have a savings, like an emergency fund.
Mm-hmm.
All right. So what happens if the tenant doesn't pay the rent for 2 months? What are you going to do? And you know what I mean? So it's really, it's a conversation about where are you and get it. It's like going to the doctor and saying, me calling the doctor and say, doctor, my knee hurts. I need you to replace it.
Mm-hmm.
And the doctor goes and just goes in and just cuts and replaces, doesn't do an x-ray, doesn't do anything. That's kind of the same thing that people, try to do with financing and buying a home.
Mm-hmm.
Which is the largest investment most people will make in their lifetimes. The house where they live at, never mind an investment, but just their primary residence. Still the largest investment that, people for the most part will make in their lifetime. So it's a lot more than the rate. So it's a deep conversation, and it's just, the good thing is, I guess the good thing, right? So that's very personal information and people are really nervous about sharing, their finances and their things.
Yeah.
But if they want to buy a house, I have to see it no matter what, right? I have to see their credit, I have to see their income, and I have to see their assets. And those are the 3 things that you need.
I always wonder, like, when people don't want to disclose how much money they have saved up. It's like, listen, the lender cannot take that money from you.
Yeah.
Like,
well, people are afraid. Well, no, you know what it is? Because that's the other thing. I mean, I got people that, I'm a first-time home buyer, and they make $400,000 a year. I'm a first-time home buyer. Any no money, no money down programs, right? Because everybody wants the cheapest thing. I mean, that's just human nature. Everybody wants to pay the lowest amount possible. I mean, that's obvious. So, people they're concerned. What's the rate and the least amount of money down out of their pocket? So they think if they tell me they have 100,000 in the bank, I'm going to say, okay, you need to put 100,000 down.
yeah.
No, but that's what people are afraid of. You know what I mean? It's
Yeah.
how much they have to, put out of pocket. But I have that info. They need to provide that to me in order for them to get pre-approved. So it's an easier transition for the conversation for me to do that and say, okay, look at this picture. Let's look at this. And here's a possible path that you can take. And then at least what I like to do is give people a plan. If you do A, B, C, D, this is the outcome. This is what's going to happen. So if you buy a triplex, you live in it, you rent it out, you get your footing, learn how to do it, stay in the house. 1 year later, you decide that, you know what, I can deal with this. I want to do this. I'm going to move on to a single family. And I'm going to keep the duplex or the triplex and as rental income, and I'm going to buy my single family. Perfect. And then here's the plan, and here's how you do that. And I think that if people have a plan beforehand, that they, long-term plan, and that they actually follow it, they'll find that it's easier to do a transaction in that manner.
Yeah, no, absolutely. Everything has to go with a plan first.
That's it.
Especially, I mean, early on in my career, I can count on 2 hands how many clients I started the process with no plan in place, and then I learned that I got to teach before we go out and look at properties, because I mean, people would be willing to go home shopping all day if you let them without getting pre-approved.
Oh man, I've talked to buyers. which is it's beyond my comprehension. That is one thing I cannot comprehend. Like they would go out. I was at a builder, right? And I would be there on weekends, and people would go in, they'd look at a property with the realtor, not even by themselves, with the realtor. They go look at the properties, they go into the office where I was at, and they, okay, I want to see about getting pre-approved. We just saw a house we love. I want to put an offer in. And okay, great, wonderful. Tell me what you do for work and how long you've been doing it. Because that's the first question I ask anybody when I start talking financing. What do you do for work and how long you've been doing it?
Uh-huh.
Because that's the first thing, right? More than once, a lot more than once, the buyers were like, well, currently I don't have a job. And I look over at the realtor I'm like, really? Like, you didn't ask the question before you drove all the way here? Like, I don't understand that. Like, that's something my mind cannot grasp. Like, how do you go? I mean, you must like driving. There's another agent, every time she called me,
indispensable.
it was like every time she called me, the buyer did not qualify. Every single time, no fail. Like, I knew the phone rang, and she had gone, shown the property, spent all day showing property, and then, he liked this property. See if he qualifies. You pull the credit, they don't qualify.
Right.
So you gotta do this part first, because this is the main part. You can't buy a house if you don't qualify for the loan. I mean, you need the financing in place to buy the house.
Mm-hmm,
and that's the first thing people should do. People should take care of, make sure that they qualify, and then go then go get the agent. That's the real kind of way you should do it. But most people don't do that. They go to the agent first, and then they go try to find a house, and then it's call up. What's your rate? And it's like, no, it's more than the rate. We gotta have a deeper conversation.
Yeah. The only time, I mean, I say they should meet with the realtor first to get familiar, understanding the process, and then getting connected with the lender. But definitely, before anything else, the lender is the first step. That's whenever I sit and
First
consult with
conversation.
buyer, the first thing I tell them, like once I give them what the process is, the very next thing when they ask what's the next step is doing the application. We're not going anywhere until you do the application. So if you just like me, here's my preferred lender, do the application, he's gonna let me know what's up.
That should be the path.
Yep.
So all right, my man.
That's it for today, bro.
That's it. We got a big day today. 2:00 is gonna be and we'll see what it's my prediction that today at 2:00 will be a day that you draw a line in the sand and you can see the difference starting on that day.
I guess we'll be talking about that tomorrow.
We'll find out tomorrow what the market does.
Alrighty then. Again, I'm broker associate Robert Murillo with Compass Florida, license number BK3373543, with my man John
Sepulveda, Origin Point, NMLS 1309244. Here, if you have any questions or any guidance, reach out to us and we'll be more than glad to answer your questions.
And we are ending episode 3 of the DM Florida Real Estate. Y'all have a great day.
Talk to you later.